Hey guys, I just wanted to make this quick breakdown video on the gold trade we took this morning. Same kind of idea from yesterday's trade. We first went on the 15-minute time frame. We identified our main liquidity points. So off of the 15-minute time frame, when I was getting onto the computer, I identified this zone here as my sell side liquidity and this zone up here as my buy side liquidity. And then off of these two levels right here, I was able to set up my entry for the long position. So basically the same thing that we were going over yesterday in the last video. We identified our liquidity points, which is the buy side right here and then the sell side down here. And all we had to do then was wait for our swing to be created, and then we could continue into that direction, the same direction. Right, so we can see just based off of the movement of price that we are in an uptrend, right? We were in an uptrend. Price created a low and then created a higher low over here. So we knew that price could be starting to trend up right from the start. And then once we saw this big bear candle come in with that big rejection, then we knew that the sell side liquidity would be here, because this is the point where buyers bought it up from. Right, so previously they were buying up from this level, and then once price came back into that level, they bought up again. Right, so basically that's all we were looking for. We didn't enter this trade till about here, because at this point I was still unclear on what is kind of happening. Right, so we waited until these points were created. Right, we waited until these points were created, and all we had to do was now draw our trend lines from the top and from the bottom, and then wait for that breakout setup. So what I usually like to do is, after I mark my liquidity levels, these lines on the inside are other liquidity levels. As price was creating these points, these swing points, I was marking them along the way, because these levels are going to be important a little bit later down, a little bit later in this video, because I will show you guys how I took a potential, not a potential, but how I took a short entry using these same buy side liquidities. Right, so basically we dropped down to the 5-minute after we had that set up, after we could identify our points. We dropped down to the 5 minutes, and at this point, this is where we started to watch price action. We drew our trend, we kind of refined it on the 5-minute time frame. We saw that price came back down, right? So price came back down, created another sell side liquidity point, pushed up, came back down to that point, and then this is the point where we started to get interested in that buy. So basically how I took my entry was I waited for price to start breaking out of that wedge, and then price came back down there, and then I took my entry long. I took my entry long and was able to hold it pretty much all the way to take profit. This one was a 6-to-1, I believe a 6-to-1 risk to reward ratio. Stop loss was just over a point. Like, there was next to no stop loss on this here. So that's a really tight stop loss. With price didn't even come back to it. So that was a really perfectly timed entry, I would say. And it went all the way to our target at 2070. Our overall daily target is somewhere up here. It's up here at 2142. So this is where the overall target would be. If gold can get above this blue box and stay above all of these levels, then I would predict that it will continue going up into this next daily level. And then from this level, if it can get up here, then we'll see some bearish pressure coming in. Right, if it gets above that level, then we could continue going. But until then, we have to wait until price gets out of the box. Once it can get out of the box, whether to the downside or to the upside, then we can look for some more entries. Right now, this trade that's running right now is just a small one contract short coming down. Overall, just targeting these liquidity levels to the downside. So what I was talking about earlier is that these liquidity levels are going to be important when price starts coming back down. Reason being is because these levels are the same levels that price is most likely gonna react at, right? So if after we hit our take profit, after price hit that take profit, created this liquidity here, it pushed all the way up, took out this liquidity zone right here, and then it closed back below it, right? Once we saw that price close back below it, then we could have probably started looking for short options. I personally wouldn't go short there. I personally didn't go short because I was in this long position from the morning. So there was a lot of bullish momentum. And I know gold does trend really well when it is trending. So I didn't want to take that risk of entering a short. But you could see if you did enter the short after that liquidity was taken and after that candle closed back below that zone, there was opportunity for some nice profits. It was about a 5 point trade there, 50 pips. But that was a really nice short as well. So personally didn't take that one, just took the take profit at 270. Down 270. So there was our take profit. So again, it was actually a 6-1. It was a 6-1 risk to reward ratio. And then this short here, if it can come down through all these liquidity levels, will be 8.2-1. So this is barely a point stop loss. So this is 9 pips. Stop loss is 9 pips on this trade. Take profit is 7 points, 74 pips, which is about a 8.2-1 risk to reward ratio. Very small risk on this trade. We are in Asia market right now. It's not too much going on. The reason I used a very small contract size is in case price, manipulates a little bit and pushes up, and I don't lose too much. Didn't really want to be entering in this low volume session with 5 contracts or more. Maybe tomorrow in New York session, if gold is running again, then we will get into the larger contract sizes again. But for now, we're just gonna let this one run. But yeah, basically that I just wanted to make this video and show you guys the thought process behind this trade entry. Same entry method, right? Same entry method that we use. Same thing from yesterday as well. You can see that the entries are pretty tight. We are catching them basically off of the lows, right? So that's basically what we want, and not trying to catch it in the middle of the trend. So we do want to be at the top or the bottom of the highs and the lows to catch our entries. So this was a really nice entry. So we'll let this short position run for a little bit and then we'll see what happens with that. But I hope this video helps you guys out. Definitely, if it doesn't, then definitely reach out. Send me a message on Instagram or Telegram or whatever, and then I can help you through my thought process. So basically, let me just add to that one with these same liquidity zones. How I was able to catch that short is because we broke through that buy side liquidity and then we came back, we rejected that liquidity, pushed up off of it, which was expected, and then we broke back below it. Right, so we broke back below that liquidity level and then we retested it from the bottom side, and that's a reason why I took a short entry, right? Or a reason, or I guess an example of how I can use these buy side liquidity zones on both sides, right? So it can be a buying level, it can also be a shorting level. So in this instance, when price broke out, it was a buying level. And then when price broke back below, retested below, it was a selling level. And you can see that price did come back to that zone multiple times with rejections. And we did have good sell pressure from those zones. So right now I am expecting price to come all the way down and clear out some of these zones over here, at least back down to this one here outside of the blue box. But at this point, who knows? Price can do whatever it wants to do. So I'm going to leave it at that. And if you guys have any questions, again, message, reach out, or comment on this video. And I will see you on the next one. Have a good one.